Hi guys, and welcome back to Cash Bright, your guide to investing in an ever-increasingly uncertain financial world. It's been an interesting summer in the stock market. The epic rally of the Nasdaq Composite, for example, seemed to be going on and on from where it began back in March, and grew 57% from the beginning of April until the 2nd of September. This is where the rally has since stalled, however, as the index dropped more than 10% as they were pulled down by investors selling off their shares in the bigger cap stocks such as Amazon, Microsoft and Apple. Similar effects were seen in relation to the S&P 500 and Dow Jones. As we now head into winter with the prospect of a second coronavirus wave, a contentious US election, and a chaotic, unceremonious Brexit, the onus really is on investors to be extra cautious in the stock market, as we are likely to see much greater volatility than we have seen over the past 6 months or so. So, here are 3 stocks which we believe are worth looking at and to possibly buy as the stock market starts to apply the brakes. Number 1. Apple stock. Since the start of September, Apple stock has been trending downwards, and to date its stock has fallen more than 20%. The fall has cost Apple more than $500 million in market value, and directly follows its 4-to-1 stock split at the end of August. So, after a drop in the stock's price, is it time to consider buying? Well, on the surface, it's important to note that the stock is trading at 33 times the company's earnings, and the price to sales and price to free cash flow figures are around double the 5-year average. So the stock is, at least on paper, overvalued. But Apple is of course a very strong company, as evidenced by their impressive second quarter figures. They have led the way in terms of innovation over the last few decades, and are very well placed to capitalize on the emergence of 5G connectivity in the US and around the world. Even given the likelihood of volatility in the stock price, there has never been a bad time to invest in Apple. Whilst of course past performance is no guarantee of future performance, the recent drop in the stock price still presents an appealing opportunity to buy a truly solid tech stock. Number 2. FSLY stock. You may not have heard of FSLY, but they are an American cloud computing services provider which uses its technology to speed up websites and apps. Their largest customer is TikTok, who have been the subject of a ban in the US over its Chinese ownership. FSLY, as their name helpfully suggests, have been growing fast as a result of their successful relationship with the social media platform, and have increased customers in their second quarter results, as well as their revenue by more than 60%. The company's stock price has followed suit, and currently fluctuates around $85 a share. There is plenty of growth potential in this stock, particularly if the ownership controversy with TikTok can be resolved, as they are of course a crucial client of the company. For me, this stock is one to consider buying, as I personally can only see the stock increasing in value in the future as it continues to grow its customer base and revenue stream. Number 3. Netflix stock. With winter coming and the possibility of more of us spending time at home in order to avoid a second wave of coronavirus infections, this stock makes a lot of sense right now. The company grew during the second quarter as new and existing customers had little else to do whilst isolated at home. The stock, as a result, is a little pricey at $470 a share, a price which is almost 80 times the company's earnings. But during times of economic uncertainty, I don't think you can go far wrong by investing in this stock. The company are constantly updating and improving their offering to customers, and more of us are relying on Netflix for our entertainment. as of course cinemas and theatres are likely to be out of action for the foreseeable future. So, with the possibility of the market finally losing its steam and cooling down closer towards market fundamentals, what do you think of our stock suggestions? Do you have any better picks? As always, feel free to discuss in the comments below. Thanks for watching. If you found this video to be helpful, please leave a like and don't forget to hit the subscribe button. And until the next time, stay sharp, stay hungry, and stay cash bright.